Hey there, traders. Chris here from Grindstone Trading. I've got a question this morning about Lucid Motors and CCIV, and I thought this was a good opportunity to talk to you guys a little bit about how I play SPACs and SPAC warrants. It can be a little confusing to people, so I'm going to try to start at the beginning and give you a Cole's note of what a warrant is, how a warrant works, and all of that sort of good stuff here. And we'll be happy to answer any questions that you guys have later on. So basically, we're just going to talk about what a warrant is, how to spot the good warrants that are likely to go up, and how to do what I call, quote unquote, SPAC lotto, or SPAC warrant lotto, where essentially I'm playing the warrants of companies that I believe are going to find a merging partner soon, and that the price of that warrant is actually going to go up. So let's get started, and I'll show you guys what I'm talking about here. So here's the big chart for Churchill Capital Corporation number 4. They've done 3 of these previously, and this is their 4th one, and they had initially announced that they were sort of in some very loose talks with, I believe it was DirecTV. Those talks never really materialized into anything. And then all of a sudden, just out of nowhere, it was announced that they're merging with, well, in talks to merge with Lucid Motors, which everybody is extremely excited about, obviously. I know this chart is way overblown, so I'm actually just going to kind of zoom it right in and back it up so you can see some of this movement that was happening before the SPAC was actually had sort of a merge partner here. So here we go. So basically, this is the price of the SPAC itself, the actual stock, the SPAC stock, if you will, and this is the price of the warrant right in here, that same sort of timeline. I bought into this one, I think it was about, I can't even quite remember. It was not long before takeoff here. See if I think I bought in at about $1.40, $1.50. I think I bought this pullback here, if I remember correctly, to about $1.50. And it doesn't really matter what price I bought these things at the end of it, because they got such a good partner that $1.50 is now turned into almost $19 a warrant. So what is the warrant versus the stock price? Well, the stock price is the stock price. A warrant is essentially a single 1150 call option on the stock price. So essentially, I'm saying I want to buy the rights to buy, each one of these warrants is the right to buy one stock at $11.50 per share. And that can be executed as soon as 30 days after the merger actually takes place, assuming, of course, that it does. So why was I confident buying these warrants right in here or in here? I can't quite remember. It wasn't on this peak to 170, 180. It was on a pullback. So I think I paid about 155 for a pile of these warrants. And then they shot up and I sold them all. And then I realized, oh my God, this is a possible EV merge. So I rebought them back right on this dip. Or was it this dip? One of these dips to about 470, 480, and it hasn't turned back since. So why am I playing the warrants, which again are 1150 call options on the stock price, instead of the stock itself? Well, I'll tell you, we can do the math on this all day long. Let's call it $1.80, just to be easy. $1.80 per warrant, currently worth about 19 a share. So if we just use easy math, let's say $2 a warrant, 20 bucks. Current value, I bought them at $2. That's 1,000% on my money, which is fantastic. Playing just the stock over that same period of time, stocks always have that $10 floor price and trade between about $9.75 and $10.50 forever and ever and ever until they finally get a merged partner. So ultimately, if you had just bought, say, this is the same amount, whatever amount of money at $10 a share, just again to use easy math, and just use $40 up here, that's 400% on your money. This is 1,000% playing the warrant versus 400%. Still fantastic. You couldn't have gone wrong doing either thing, but the warrant percentage-wise is much better value. And if you win, it's always better value. Now, I have conversations with other investors all the time, and they say things to me, especially my long-term investor buddies, about percentage gains. It's not like the most important thing, man. And I'm just like, yes, It is, because 98% of people who are trading stocks are trying to grow their portfolio, preferably quickly. That's obviously what I'm doing. It's obviously what we're all doing in this group. We're trying to grow our portfolio by percentage gains relatively quickly. So from that perspective, it's always a better value to play the SPAC warrants. And if you just play them like a penny stock chart, we'll zoom in here. You can see this solid ascending trend line, falling, making little bounces off of SMAs here. It's very easy to do. There was nothing complicated about my decision to buy this this particular one. And obviously being in so early meant that my gains were absolutely astoundingly huge. So coming out of this now, I want to show you why this one. Why was I buying this one, Churchill Capital, versus the other 200 to 300 SPACs that are currently available for me to buy? What did I like about this one? Why was I in on it at $1.80 a share and rode it all the way up to $20 a warrant? Well, I'll tell you, there's a wonderful, wonderful site. Here it is. Wonderful site called SPAC Track. I know you can't read that. That's just SPACtrack.net. SPACtrack.net/active SPACs is where I'm at here. You've got to kind of expand this list out every once in a while. You've got to kind of go all the way to the bottom and keep clicking buttons down here to show all the SPACs that are available. And then all I'm doing is I'm searching through this huge database here and finding stuff that I like. Well, how do I know what I like? Primarily, for me, what I'm looking for is trust value, the size of the SPAC. So you can sort this any way you want. If you want to play like penny SPACs, there you go. If you want to play the big boy SPACs, there you go. Your biggest one ever, Pershing Square Tontine, they raised $4 billion and are looking for, quote unquote, a unicorn company to merge with. Best of luck to them, assuming they ever find it. This was a $20 SPAC here. I can't remember what their warrants were. I think they're $23 warrants. I never actually played this one. I played the next one down the list here, which was CCIV, which at the time I played it was nothing. It was just money sitting around waiting for a merge, but still $2 billion. Now, my bet, why I call this SPAC Lotto, and why I win far more often than I break even or even lose. I've only lost once doing this, and that was my own blunder. But I think my winning percentage on this is something like 96% or something like that. But why was I so confident about buying a pile of these warrants for Churchill Capital long before they ever had a solid merging partner? They still really don't, but even before that, when it was still $10 a share and $1.80 a warrant. I'll tell you why. They raised $2 billion, and they have a fantastic team of people behind this SPAC. They didn't raise $2 billion to merge with some toothpick company, right? That's my thinking, which is why I'm also watching pre-IPOs like Soaring Eagle acquisition. I definitely want to be buying dips of those warrants. BFT... I played this one, same thing with the warrants. I bought the warrants at about, I think, $2 a warrant, and they're $4 now or something like that. Is that the warrant price there? Warrant price, yeah, this is it. So I won on this one, over 100% on my money. And here we've got the next Churchill Capital, which is CVII, same company. This is number 7 that they've done here. So you can see how well Churchill 4 is doing. Now they're up to Churchill 7. These are warrants that I absolutely want because this company has a fantastic reputation of finding solid merge partners like Lucid Motors. So these warrants are definitely something I'm going to be watching when they release them. Right now it's just stock, but once they come out with warrants, assuming they do, I'm going to be watching like a hawk. IPOF, I won with this one. WPF, what do we got here? I don't think I played that one. Here we go. Jaws Mustang. They don't have warrants available yet, so I'm watching that. Where's another good one here that I played and actually did okay on? APSG, I've got warrants in this one. Nobody seems too excited about Solera. But that's essentially how this works. I'm finding companies that are big players in the spot game, and I'm just essentially playing their warrant like a penny stock that has an ascending trend. IPOE I won on. IPOD, I called that one out to the group when it was still super cheap, and now they're doing really, really well. See if I can find IPOF on here. IPOF. So this is currently $15 share and a $5 warrant. So why are people so excited about this one? Because people are getting excited about SPACs again. And this one is over $1 billion they raised, which again, they didn't do to merge with some humdrum company. They did that to merge with something awesome. So people have already jacked this price up 50% from the $10 floor price of the SPAC, just on the excitement that eventually this is going to be something, right? So that's a little bit about how to play SPACs and SPAC warrants effectively. I never, ever buy the stocks anymore for SPACs. I never touch them. I only play the warrants. Because, again, as I just showed you guys with the example with CCIV, the percentage gains were bigger. Absolutely massive. More than double. So what would the sense be buying the stock when the warrants go up by a much larger percentage? It just doesn't make sense to me. So that's essentially my thinking and why I do things the way that I do when I'm trading. And if you follow the group, if you're in the Discord group and you're not just a random stranger watching this, anytime I see something that I like, I have a specific channel set up. I believe it's called SPAC Warrant Trade Ideas, and I'll toss it in there, and you guys can definitely jump in and take a look at it and tell me either I'm crazy or reasonably smart. So, but we've got a fairly good winning percentage in there. I believe my latest one that I called out, I think cheap warrants a couple weeks ago with Ajax, and I think we're all up 40-50% on that one. So these are very, very high percentage plays, especially if you're playing the warrant before they've found a merging partner, or before what happened with Lucid Motors here, before they're in talks, is what it is. And I did some more research for you guys too, in terms of like how big of a risk is it buying Lucid Motors right now? Well, it's a pretty big gamble because they're in talks with Lucid Motors. CCIV and Lucid Motors are in talks right now. 87% of in talks reports actually result into a letter of intent and then followed up by a merger. 87%. So there's still a 13% chance that this comes crashing down if they don't end up merging with Lucid Motors, or if Lucid Motors decides not to go public, or if Lucid Motors decides it's going to merge with something else, or another SPAC, for example. Then CCIV is in trouble. But for now, it's crushing it. And then finally, I just wanted to touch on, I don't know why I keep minimizing things. I can keep two things up at a time. I wanted to talk a little bit about the difference between warrant price, which is, again, what it actually costs to buy those 1150 call options, versus intrinsic value. One could argue that buying the warrant right now is actually a really, really good idea, because the stock price is so overblown that the warrant should be worth the stock price minus 1150. That's what it should be worth. That's the intrinsic value. So you could argue that $18.60 is actually really undervalued for a stock that's trading at about $40 odd. That's way, way, way undervalued. However, you see this a lot, and this is why I'm saying it's a risk, because warrant players are buying the options here on the assumption that the stock, yes, is overblown, and it's going to come tumbling down, and they don't want to be holding the bag any more than you want to be holding the bag on anything else you buy, right? So that's what accounts for this difference, is the fact that it's still in talks, it's a risk, and the risk might not pay off. I don't care, because I have such a low buying average on this that it's like, and I've already scaled out quite a bit of my my position, that it's like, even if it does come crashing down, I should still be able to stop out green. Well, not that I use stop losses, but that I should still be able to get out of the trade if it came out Monday that, oh no, CCIV and the merger's been called off, everybody abandoned ship. I'll be able to sell my my position green, the rest of it anyway, 100%. So it is still a risk buying in now, because again, and I can't stress this enough, this is in talks, and 87% chance that this actually moves forward, but still a 13% chance that everything falls apart. So that's a little bit about my SPAC warrant trading strategy, how to play SPAC warrant lotto, which again, I don't even feel is lotto. I've been told that, yeah, well, you're betting. I'm like, well, yeah, of course I'm betting. I'm betting that these guys didn't raise $2 million or $2 billion to merge with a sock factory. You know what I mean? That's the bet. I bet that they know what they're doing based on the fact that their last SPACs did really, really well also. So it's a bet, absolutely, but it's a very high percentage bet that I win all the time on. So anyway, I hope you guys enjoyed my video. I'm still working on the format here. I like it with me down in the corner so I can talk and show you stuff at the same time. So please leave your feedback on this video. Reach out with any questions. And if you're not already in our Discord group, we're killing it. We killed it in January. We killed it in December. We killed it again in February. I haven't done the final numbers for February, but we're killing it, guys. We're hopefully, fingers crossed, we're going to keep beating the market. And yeah, best of luck this week, upcoming week, guys. Happy trading, and